I'm joined today by Ed Walter, President and CEO of Host Hotels and Resorts, the largest lodging REIT in the U.S. Ed, business and leisure travel has declined significantly this year. Are you seeing any improvements in that area?
We have seen some encouraging trends. One is the fact that transient business stabilized during the summer, and as we've worked our way through the early part of the fourth quarter, we're seeing an increase in transient business, which is obviously a good sign. On the group side, while we're still running considerably behind the pace that we experienced last year, our bookings during the third quarter, during the summer, for business that happened in the third quarter were higher than they had been in the last 2 years. And the bookings for the end of the year and for next year, while still behind the pace that we were experiencing in prior years, the gap is declining. So relative improvement is probably the best way to look at it.
And what steps have you taken to mitigate some of this decline in demand?
Well, one thing you're going to do in any hotel is as you start to see your demand fall, and the demand that we've lost the most of is corporate transient and corporate group. Those are the two big areas that have declined the most. You try to find other sources of business. So one example of business that hotels have gone after is more leisure business. Now, not every hotel can do that, but certainly some hotels can. And that's one of the reasons you saw transient business stabilize during the summer, is there was generally a level of success at generating more leisure demand. Another type of business that we will go after is what's called special corporate business, which is not, say, you and I traveling the way we normally do, but hotels will have relationships with larger customers. Those customers will get an advantaged rate because of the volume of business that they provide. In better times, we tend not to want to do as much of that business because that business is at a lower price. But in weaker times like we're in right now, it's good business to get.
How do you see the major macroeconomic factors that are at play here in lowering the demand? How do you see them playing out in 2010?
We really are tied to what's happening in the broader economy. So until GDP starts to improve, you're not going to see an improvement in lodging demand. Within thinking maybe a little bit at some smaller indicators that tend to tie directly to our business, what we look at is both business investment, because what we've historically found over the years is that when capital investment, whether it's in software or whether it's in buildings, when that's improving, that seems to tie very directly to business transient demand. So when that begins to improve again, we should see some improvement in business demand. The other factor that we look carefully at is employment. While the correlation there is probably not quite as direct as it is on the business investment side, as employment begins to pick up, we typically see corporate group activity pick up.
And we talked a little bit about some of the challenges facing your sector. With every challenge, good management teams see opportunities. What opportunities do you see in the lodging sector going forward?
I think, the biggest issue for us as we look over the course of the next 12 to 18 months is we still have some of the downturn left to fight our way through, and we're going to need to continue to be pretty intelligent in how we, with our operators, manage our assets to try to minimize the negative impact until demand really begins to recover. But the challenge coming out the other side of that is going to be that well-positioned properties that are well-run should see very significant improvements in cash flow.
Ed, thank you very much.
Thank you.
For REIT.com, I'm Matt Bishar.